Hi again, Catherine and Tom. It's John Hanson again. Just wanted to prepare this short video for you again and kind of address the situation that you had emailed me on as far as no points and rolling the costs and whatnot. So I would just want to show you a couple examples of, why it's important to not just listen to what everyone is going to tell you, or to go online and see a 3.625 or a 3.875 and with no costs and no closing costs and all that, and really believe that that's going to happen. Just to give you a little example, we spend about $100,000 a month in advertising, whether it's Google, whether it's in the newspapers or whatever vehicles that we use to generate business. A lot of our advertisements will say, rates as low as 3.25%. And that exists if you want to pay a considerable amount of closing costs. But the whole point of what I'm trying to say is that, a lot of banks out there, a lot of people will tell you one thing to get you in the door, to get your business, to make you pay for appraisals and whatnot. And then by the time everything comes back, the loan goes into underwriting, or, you want to close, everything's completely different. I'm way too busy to lie, to make up rates, to make up programs, to make up closing cost scenarios. It's just a waste of everyone's time. So again, I want to be upfront with you. I want to be honest with you. That's one thing you'll learn from me. Again, specifying that integrity issue. I'm not going to lie. I'm not going to BS you. You probably can get a 3.875 with no closing, or even lower than that, with what they call A1 credit, and that means 740 credit scores. That means 60 LTV or less, having plenty of equity in your home. Unfortunately, with us in this scenario, it's not the case. So believe me, if I can give you a 3.5% rate with no cost, I do it. I'm giving you the best loans that are available out there. I know what my competitors have. We underwrite directly with Chase, with Wells, with Bank of America. So I know what our competition is offering. I know where their rates are. I know where their costs are. And again, letting you know, with a 690 score, which is really a 680 score, it's just not available. So I've really kind of, dug into this, wholeheartedly. I really liked our conversations, and I know you want to get something done. So I want to put together a quick synopsis here on this page that you're about to see, and let you know what I think is probably the best loan for you. And let you and Tom make that final decision. So with that being said, I was able to, kind of work on the cost for you, and provide you with the best rate that I could. So instead of a 203, or I think it was a 203 loan amount, you'll see a $200,000 loan amount. And here's the key: no bank fees. Okay, so we're going to roll everything in. I know these are the two options you were looking at. And also want to mention something that I think is very critical here. If we go with a 5-year ARM, it's really not going to make much sense for you to take a 5-year ARM as opposed to an interest-only 5-year ARM, or I shouldn't say ARM, a 5-year fixed loan. And the reason that is as you can see, now the rates, okay, it's 3.875. Again, the costs are rolled into the loan. The payment's $940, which was about the same, and the savings are $322 a month, or about $3,900 a year. Now, the first 5 or 6 years of any new mortgage is going to be mostly interest. So here's an example of this $940 payment. I would say probably $840, maybe a little bit more than that, is going to be a little bit less than that, will be interest. Therefore, you're only applying about $100, less than 10% of your payment towards your principal. And in your case, where you're going to move, you have to upgrade to a bigger home. Right now, your main goal, just as you pointed out, you don't want to add $5,000 to the loan, which makes absolute sense. You also don't want to throw money away by giving it to the bank and not being able to utilize that. So with that being said, the interest-only option, which, again, let me just mention to you, I don't think any bank out there besides us, because we're privately held, that can offer an interest-only loan at 80% equity. Okay, it's just not going to happen. So I would take advantage of this opportunity. As you can see, it's literally $210 less per month. If you decide, hey, maybe we want to apply some of those savings over the course of a year or over the course of a month and pay down some principal, do it. There's no prepayment penalty. You can apply as much principal as you want, but I would say that difference here of $4,000 to $6,500 a year in 5 years, it's you'll see on the next clip, it's tremendous. And I'd rather you take that money, even if you invest half of that money, and put it into a conservative bond or annuity, which I can help you with if you don't have the right investment vehicles. But I mean, you're going to grow literally a little nest egg here for your children's college education, or use the $530 a month you're saving and pay the car loan every single month, and utilize what you would normally spend there into an investment vehicle, whether it's savings, checkings, bonds, annuities. Again, these are things we can discuss at a later time. So I would take advantage of this. It is a higher risk loan because there is not a lot of equity. It's an interest only, meaning a low payment. The bank's not getting any principal each month other than what you decide to allocate, if you do indeed. So they are going to charge you a little bit for the loan. It should actually be 202 and the payment 735. So excuse me there. But again, the difference here is $210 plus per month, which you'll see here on this slide. The 5-year savings, okay, if we compound this, you're looking at roughly, sorry about that. The 5-year savings, as you can see with the traditional 5-year fix, is about $19,000 plus. But with the interest only option, you're looking at $32,000 plus. So as you can see, it's literally almost double what you would be saving by going with the interest only option and keeping that additional cash flow in your pocket, rather than being forced with the principal and interest payment, being forced to send it into the bank every month. Okay, so I just wanted to kind of stress this, and again, I'll get your loan closed fast. It's not going to take 2-3 months. You're going to get what I promise you. There's not going to be any surprises. I don't want to waste your time again, and I don't want to waste either of ours money going forward. Now, on the line of credit, also, you didn't mention this at all, so I wasn't curious if you were anticipating taking this out or not, but not a lot of banks can do this either. They can't go up to 90% of the value of your home. And again, you're only going to pay interest on the money you borrow. So I'm able to provide you with a great new loan, saving you $530 a month if you decide to move forward. We're also going to provide you with the line of credit, in which you'll have almost a $50,000 line of credit to use for the repairs or for whatever other work you want to do before you sell the home. So I really hope that I've answered your questions, your concerns, and I hope that you and I can do business together. Give me a call on Monday after you review this over the weekend, and let's see what we can do to get the process started and start saving you money immediately. All right, so thank you for your time, and I'm available on the weekends if you want to call my toll-free number, the 866-697-3349. If you're watching this tonight or Sunday, you have a question, you want to call me, and I can't wait, I'll be there for you. Call me anytime. If not, have a great weekend, and I look forward to talking with you guys again on Monday. Take care.